Tuning in, Al was shedding some light on what is happening in these financial markets and how the financial markets work. It's based off of supply and demand, which is buyers and sellers, and the big boys, the institutions, they're the ones that are creating these moves and moving the markets. And Al, as we get into this segment here, we have a lot of listeners that want to understand how the successful are creating income or cash flow utilizing the financial markets. Now, we have multiple markets out there, and I think everybody knows the stock market. That's what you hear and you see on TV, and that's all we really talk about, that and mutual funds.
Right, which is just a bunch of stocks.
Yeah, but there's other opportunities that us as investors have out there. Let's explain how the successful are creating income utilizing these financial markets.
Yeah, the interesting thing is that the market that Wall Street puts most of their clients into is the stock market or mutual fund market or maybe annuities. And that actually is the smallest of all of the markets that are out there, and they spend very little time educating or counseling people on the bigger markets, the larger ones like the futures market and the foreign exchange market and the options market. And we'll go into more detail on these in a minute here. The foreign exchange market trades $5 trillion a day.
Only $5 trillion, right?
Only, yeah, just.
But think about that. That's larger than all the stock markets in the world combined.
Combined, right? So there's a lot there to take advantage of if somebody is willing to go through the education, learn the knowledge, have the knowledge and the skills to be able to use it. But we talk about copying. We make kind of a big deal out of copying the people that are successful. One of the biggest benefits you get out of that is you cut out the trial and error.
Yeah.
Nobody is born with the knowledge and the skills to do this or basically anything, or very few things, but it's learned. It's something that is learned. And start out with what is really important as far as what moves the market, because anybody who is going to be a trader investor wants to participate in an upward moving market if they have assets that are designed to do that, and you should also be able to participate in a downward moving market. And how do you do that? Well,
what do you mean by that?
Yeah, there are assets and strategies that work in all market conditions, whether the market or an individual asset is going up in value or down in value or just laying there and not doing anything, going sideways.
So we all know that when investors buy, it goes up, they profit. How do you profit in down markets? How is that done?
Well, you kind of do the opposite. When you are buying something to participate in an upward market, you let's say you buy a stock, you buy shares of a stock to open a position, and then when you have a profit, when it goes up in value, you take a profit, you close the position by taking that profit. And what you do in a downward moving market is the opposite. You actually are selling something first, and then buying it back, hopefully at a lower price.
And that's called shorting.
It's called shorting, and it actually is selling something you don't own. You are borrowing it from a broker, and it's not a complicated process. Basically, it's pushing a key on a computer to sell something short.
And that's because it's all electronic. Without getting into the weeds, it's just you selling first and buying it back. It's opening and closing. It's the same thing. It's just different move in the market.
Right. You're not sitting down with an attorney putting together a document. You just electronically, you are borrowing something, selling it, and then the goal there is to do that with something that you feel strongly is going to go down in value. Then let's just say, for example, that you short IBM stock.
Well, let's talk about Netflix. You talked about Netflix in the first segment.
Okay, sure.
That went down, what you said, 80 points?
85 points. Yeah, it's even down in the aftermarket. So, sure, if somebody had decided to not take the analyst's advice, and they had done a short position on Netflix. So basically you pull up on your trading platform the Netflix symbol, you hit short and or sell short, and then it's automatically loaned to you and sold in the market. It would have been sold to, say, $575. And the goal for a person doing that is to buy it back at a lower price. The difference then is profit. It went down to $490. So that's your $85 profit there. That's one way of making money in the down market. But there are other ways also. And we go over these in these classes that you're going to be talking about. We talk about how to make money in all three directions.
That's the key, Al, is all three directions, because we know the markets go up. That's simple. Everybody knows that, and that's all they talk about. There's sideways market, but that down market, that's another opportunity, and a lot of people think that's either a bad thing or they're just afraid. It's the same thing. It's just you're just doing it in a different direction. So, Al, you talked about